weird. Wonder why it doesn't show that trade. There it is. Alrighty. Thank you, all dozen of you or so that were so kind enough to send me the instructions on how to do this moving around business here. Alright, so the business. Alright, so we're looking at the market trading up into a breaker. Okay. Utilize the, actually let me take the trade marker off for a second. Then. So we had a fair value gap here. My charts will be more useful in the trading view portion after this. I just want to show you the trade. So we had a breaker here, trading into that here, and I used that as my entry. I didn't want to wait around for the fair value gap in here because I had a busy morning, and I was not really concerned about exactly where I was placed at. The breaker was enough. I was using the gap and the mean threshold of the bearish order block. Risk was just above that, so it wasn't a lot in terms of risk. And then the market obviously gave what I was looking for. You're going to see the difference, obviously, between what I'm going to teach you tonight versus what, obviously, the YouTube community saw on the community tab. All right, so the entry here, relative equal lows there, and I just basically used the swing here in this fulcrum point. So if it went down below this low here, that movement down. Now I'm not using the entire wick, and again I'll show you this on TradingView, but the reason why I used 4,446 level to cover was this movement here. So I'm using the close of this candle into that low. Now it's just a finesse thing. I could have easily just used the entire wick to wick, but I wanted to use the highest in volume as it moved away from my trade idea. So I was already short. I want to know how far I can trade down. So taking this body's close down to that low, projecting it down with the fib, you'll see that it gives me targets down here. And I did the same thing with this price swing here to here. You don't see me obviously doing the trade because I'm not teaching that level on the community tab or in YouTube, but I wanted to show because I got a question from one of the members. Can we see the trade? Yes, here's the trade here. Okay. If you go over to the monitor tab, cash and sweep, you can see here it is. Okay. There's the trade, the commissions and such, and the actual entries and the times that the trades were placed. Okay. And that's going to be it. Let's go over to TradingView. All right, so here is the E-mini S&P futures March delivery contract, and this is all of the annotations I had. I did all this stuff laying in bed this morning. I just did not want to get up. Back was killing me. Did a little too much yesterday, and I'm paying for it. Old age is kicking in. All right, so the price swing here, what I was explaining was I took a fib, drug it down to the low here, and then adding our standard deviations. All right, so you can see 446 right there. That's 1/2 of a negative standard deviation. So I was looking at that level on one of my charts, and I used that to close it. I could have used, obviously, the -2 standard deviation, brings us down here. And if I add this 2.5, 3 doesn't really quite get hit, I don't think. No, it doesn't get 3, but 2.5, nice movement there, and rallies. And then the other swing projection. And this is intraday swing trading. It's the same idea, really, of looking for the setups that would be otherwise on a daily chart or a 4-hour chart. Just applying the same premise to the intraday price action. So, negative 0.5 standard deviation come in at 4443 and a quarter. And I just didn't feel comfortable. I felt we were going to get a retracement back up. I didn't want to sit through that and the continuation lower. So I elected to use the most recent price swing. So I was, in my mind, I was thinking if it can trade to 443 quickly while it was meandering around in here, I didn't like all this pausing. That's one of the indications that was likely to lead to this retracement back up into this low. Now, it could have easily went up into this area here. It would have been a little bit too rich for a retracement for me. Now, could I have weathered it? Yes. But I just don't want to give these markets in the current climate that they're in more room than it's required for them to give me an opportunity to scale out and get profits on the trade. So see all the wicks in here? Down, up, down, up, down, up, down, up. That is indicating that it's likely to turn around, but I don't look at that as bottoming. Okay, a lot of traders see that as bullish for it to continue and reverse, go the other way. And it just gives us a small little retracement, or in this case here, a consolidation right before another dump lower. So I'm going to take this fib off. It's accomplished the method here. And let's go out to a 15-minute time frame. All right, so we have relative equal highs. Overnight, we rallied up above that. Let me take all this off for a moment. Relative equal highs. We rallied above that, and we broke down and created the fair value gap in here that I mentioned on the lower time frames, which we'll revisit in a second. But once it ran these highs, that's enough for me to go in and start hunting the likelihood that we may trade down below and get into this range here and clean up some of this area, which it obviously did. Now, why did it reverse here like this? This is not for YouTube, okay? This is the part that's just for you. If you go out daily time frame, actually I'm going to just remove everything. All right, and just do it here, do it live. Screw it, do it live. I'll do it live. I don't know if you guys ever watched the, what was that guy's name? Bill O'Reilly, The Spin Factor. Or I'm not sure what that was. I may have it wrong, but in one of those episodes that he was filming the teleprompter. You going off track? ICT? I know. There was a episode where he was starting his broadcast, and the teleprompter was acting up, and he flipped out. You can actually look it up on YouTube. It's very funny. Totally loses his mind. All right, so why did it reverse down here? Well, we have the fair value gap, okay, in the form of a SIBI, sell side imbalance, buy side inefficiency. So we went up yesterday, didn't quite hit it, but then we opened here, traded down to this level. That's your what? That's your real support level. Why is it support? Because this range now, it went down, delivered sell side, but there's an imbalance, not enough buy side. So we have buy side offered here, but we have a remaining portion of the move, which is this candle's low. It opens, trades down first, then pops up into it and closes it entirely. See that? So let's go back down to that 15-minute time frame with that added to the chart. And suddenly, as if almost magic, the market starts to have a little bit more rhyme and reason. So we have all this movement lower. Let's take a look at, I hope you don't mind me being a little fast and loose today because I don't have the time to work out the, actually it's not right, is it? Let's go to that. Actually, no, I cleared everything. I usually keep a chart in here. I got to ask what this is over here. If, how is that doing it? Oh, click on that. It takes it away. So you can have like your Dow and your NASDAQ overlays when you put the compare tab on. And if you don't want them on the chart and you're just watching the naked chart or whatever you're looking at, and you want to cycle back in. I don't know how I found this out, but I was wondering what this did one day, and I saw it. I said, wow, that's pretty neat. I do get a lot of tips from all of you, and I appreciate that, especially like the TD Ameritrade with finding the little finger icon. And you have no idea the madness that brought on until a dozen of you or so. And there's enough of you that I can't name all your names. You all know who you are, but thank you very much for sending the emails showing me how to do that. And even with TradingView, I get a lot of tips with that through a lot of you as my students. So the student teaches the teacher. I don't have any shame in that. So if I don't know something and you guys see I'm struggling with something, or if there's a better way to do it, I may not elect to use it, but I certainly appreciate your willingness to try to help me out. So, and I'm going to add the Dow. And plot this on the low. Okay, so you can see the accumulation that's taking place in here. So we have a failure to go lower, lower on Dow. NASDAQ says no, it's not going to go lower, and the S&P does go lower. At the same time, it's trading down into that discount low of the fair value gap on the daily chart. Here's a premium high and a discount low. So we're seeing that SMT divergence that we like to look for accumulation, and it's trading down into the buy side imbalance, sell side inefficiency. Why doesn't it completely close this in, ICT? Because the imbalance takes precedence over that. Let me rephrase that so that we understand. When it's trading down, why doesn't it go over here? Because if you don't have this level in mind when you're watching the price action, you might lose the context and think, okay, we broke these lows, how far can it come down? It can come back and completely close this in, because the misnomer is every imbalance has to be rebalanced. Well, that's not entirely true, because your time frame, or let me say it differently, the duration from when you notice it on your chart to when it actually completely rebalances, that's an unknown factor. Like, you're not going to know that. I don't know that. So there's some things that have to be measured and weighed out each individual trading day and each individual trading session. So there's a lot of balancing acts, like plate spinning. Many times I've used that analogy. You got to keep constantly referring back to several different things when you're looking at live trades. Now, you're going to get folks that say, well, you're overcomplicating, you're putting too many things in there. To me, this isn't complicated. It's just what I'm used to doing. But if you're trying to learn this, and you're going to have problems with understanding why certain imbalances don't completely close in, or why doesn't it go to consequent encroachment, or why doesn't it do like a institutional order flow entry drill down here. Well, we have relative equal lows. We hit the top of the range with the fair value gap premium high on the daily chart and trades down to the low. Hits it, consolidates. Everybody else is going to expect what? Another leg lower. No, because now you are initiated. The discount low on a daily chart, that is extremely powerful, and it's going to act like what? Real support. This is the first time the prices actually came down to that level. For those of you that subscribe to the Sam Seiden school of thought, where the first touch or a fresh level is good, well, let me tell you something. Toast is not the second time you touch that bread. It's gone through the toaster, right? It's basically been cremated. So toast is good when you butter it all up with a little bit of ICT goodness. I know, I'm being silly. So there's no need for all of this to be completely closed in. Okay, see all that? This stops it, even though it does a little bit of movement through it. That's errant price action. That's reasonable because of the volatility that the market's in right now. That is absolutely acceptable and should be expected. But don't expect this entire range, or certainly not even this one, to be traded down into, because it's really attacking the sell side. How far can it go down? Well, it can go into this imbalance. Maybe consequent encroachment. Maybe. Because it would be just a little bit past that. Just for completeness sake. Some of you are probably thinking, why don't you just put a fib on here so I can see what it is? And it hits consequent encroachment there. Goes a little bit past it there. Notice that? And then that's the business for that. So by my eyes, I didn't see it correctly. But it hit it here, here, and here. Went through a little bit, but left that portion open. Let's take that off here. So the logic is, clearly you can see the overnight run. I had that pegged for the E-mini S&P. I didn't elect to use this one for any special reason. I just wanted to do E-mini S&P because I've been doing NAS a lot. And folks were like, can you show a S&P trade? And can you do a Dow trade? So I don't like to trade the Dow, but if I see something I really like, I'll try to do something. But again, I prefer the NASDAQ right now because it moves around a lot. In fact, I really wish I would have traded the NASDAQ today and put the S&P as another trading day, because the NAS could have really padded me out today, but it's okay. The fortunate thing is these types of things tend to repeat. Okay, so elongated consolidation hits the fair value gap premium high, runs the relative equal highs out. So where should it go? To a discount. Where's the discount? Below these lows and the discount low of the fair value gap on the daily chart. You have to have these levels in mind, folks. Whether you have them on your chart or whether you have them in your notes, be mindful that these are hot levels. They're levels that are going to be meaningful to you. They're going to change daily bias. They're going to change the market structure internally, and you're going to see real moves come up for them. This is just a testimony alone to it. All right, so with that, let's go up to our hourly. Just get a full panoramic view here. All right, so you can see it's not anchored to the right candles because I did it on the daily chart, so it is what it is. My obsessive compulsive, see, I can't even do it. I got to fix it. So it's a struggle, folks. It's such a struggle to live with this, but it gives me a pursuit of perfection, and it keeps me striving for better. So that's actually a good thing. So where are we going from here? If you look at this time frame here, what do you see? I personally see the likelihood of a market maker buy model. Now this is just a little bit elongated for my liking, but still overall the structure is there. That means the next level of liquidity here is likely, and if we accelerate through that, the relative equal highs here at the original consolidation. Be mindful of this leg in here. So we might go out and create a little bit of a retracement type of move and then send it to the next level higher. I'd prefer that, but it's not an ideal market maker buy model. And technically, I still think that anything can happen with the geopolitical circumstances that we have at present. I'm kind of mixed with the idea of Russia. I haven't looked at any news today. I haven't looked at any kind of information that I usually look at, and a lot of questions are many lines of questioning I'm getting through the this thing over here. I'm not going to open it up because it shows people's names, but they'll ask, and they mention their username in the mentorship, so they know. I can tell that they're a student, not some guy saying, I'm in mentorship. Can you tell me? No, I don't do that. Just like in emails, if you don't give me your username, I'm not really answering your emails. It might be something very simple. It would be very easy for me to answer, but I'm not obligated to anyone that's not in the mentorship. I'm not obligated to YouTube members, okay? If they ask questions, you see me doing a lot of question and answers over there? No, I don't do that. Here, in this community, you have access to me, okay? So I want you to feel like you can ask me things, but I don't want you to feel like you can send me a million emails, because we had students in the past which I've had to ask them, hey, look, can you just slow down with the emails? Because many of the things you're asking are actually taught in the lessons. You just got to go through them more methodically and take notes. So I'm saying this, but also reminding you that if you're hearing this, you're a charter member, because we put the people out that should have made their charter payment and haven't, or they were for the accelerated portion of the 2021 group that paid faster than they should have. The others are finishing up 12 in the month of March. That's their charter membership month. So you're about to become a charter. So don't take this comment that I made just moments ago as an invitation to start inundating me with emails, because as impersonal as it may seem by me saying, I don't want you to send me emails because I can't keep up with it. And it gives the impression that I don't care when I just simply cannot be in front of the computer. Like, imagine, and I get lots of emails, and I have to include this. I know it's right in the middle where your attention span is the highest, because I want to make sure you hear it and understand it, and then we can go into the details and nuts and bolts. This is also the reason why I do a PowerPoint. The forum, I want you to utilize the forum. So if you have a question, don't be embarrassed about the question. Don't think, oh, this is probably a silly question or a silly, stupid question. Folks, if you start seeing members that start with FX21 in the forum and they're asking questions that are, in your mind, infantile for what they should already understand, just know that they're new. Okay, they're in the last group and they probably missed things. They didn't go through the mentorship twice yet, like some of you, or 3 times or whatever. So be an encouragement to them. If it's something that you know that you absolutely, beyond a shadow of a doubt, know what I'm going to say and is correct, you're welcome to answer that. If it's wrong and I see it, I'll correct that. Okay, but some of you veterans in here, I'm leaning on you to be part. This is what I meant with the community. I can captain this ship, but not sit down and have a one-on-one every single one of you at every given time that you want to have that. And this also helps the community because when you post the questions or concerns in the forum, when you're a charter member, you can post to the forum, you can create threads, you can do all that stuff. The idea is for you to post it in the forum because it alleviates a lot of the pressure that I get with emails backing up. And then I get people, hey, I emailed you 5 weeks ago and I still haven't a response yet. Are you even getting my emails? Those types of emails, I don't like that because I know I physically can't get to everybody. But in the forum, especially since we'll be stopping the video portion of the mentorship, and I'm going to be moving into the exchanging of the ideas in chart form and in talking on the forum, it'll feel more personal. Many of you like this type of medium, but this type of medium is exceedingly draining for time and energy and resources. It's not needed. So I can communicate a lot and faster. Like you can go through the content, you can go through the videos, and you can also choose not to read these types of posts. What I'm saying right here, these types of things can be put in a post, and I can warn you ahead of time, hey, look, nothing technical here, it's just housekeeping. You can avoid that if it's not something you want to be paying attention to, but I prefer that you read it because it might be something that might be useful to you in the community. But the annotations and the things for the charts and such, they'll be right to the point, all right there, all typed out for you. So that way you can read it, it's done. You're not wading through long-winded videos, okay? You'll benefit from it because a lot of you will get exactly what you're looking for, right to the point, and then you can go about your business. Me, I can do very quickly one PDF file, throw watermarks on all of them with a click of a button, upload it, and I'm done. And literally probably in 30 minutes, I have everything done in everybody's user group. But I know some of you are going to bellyache and say, but I like the videos. I like the videos, ICT. I'm going to do more teachings through the forum. And I promise you, you will find that it's better there than here. Because you'll have something that is more user-friendly. Okay? PDF is something that you can download. You can put it in your phone. You can read it on the go. It doesn't drain a lot of resources to have. And it's easy to store and manage all that stuff. All these videos that you're being asked to download, remember in the agreement when you signed up that you would have lifetime access. The lifetime access is the fact that I'm giving you permission to download them now, whereas before I didn't want you to download them until 2021 group. I was telling them from the beginning, download as you go, download as you go. This is lifetime access to the videos. But the mentorship that you're purchasing and paid for as a charter member is a part of this private community in this forum where you get to ask me questions, I get to answer it. It's a public community for us only, not outside. Everybody can come in. It's just for us to hang out. And I can talk and express myself freely here and not have, trolls or people that are going to be rude. If you're going to be rude, I'm just reminding you, if you're going to be rude in the forum, you will be ushered out of this place faster than you've ever imagined. And I don't like to, do that type of thing, but it's happened. That's the only housekeeping part I have for this video. So it could potentially be a market maker buy model in here, a sloppy one, but it could still manage to, push itself up there. Now, what changes it? If Putin does go into Ukraine, if that happens, and it's legitimate, not them doing a training exercise and the media twisting it around saying they're going to invade it, because I'm reading into certain reports that they're taking something that is basically nothing but taking things that Putin said, which I think are stern warnings, and then putting it together and say, okay, they're going to invade, which is ripe for a false flag. Okay, a false flag is something that's going to happen in a country, and they blame someone other than themselves who actually did it. Kind of like what I believe September 11th was in the United States. I believe that that was our own people that did that, and we used that as a catalyst to go in and rob, pillage, and rape the Middle East and take oil and make billions of dollars for Dick Cheney and his family and the Bush family. But that's my opinion. You're never going to convince me otherwise. But a false flag is that, okay, where one country does something and says, someone else did this to us, okay? We're in that condition right now. So we're ready for that to occur. A black swan event is looming also. We're in that same event. Anything can happen in this climate. So just be mindful of that. Which is another reason why I don't feel confident saying it's absolutely going to be a market maker buy model here. If we didn't have all these things, I would be like, okay, well, I'm going to try to trade this long and just go for this one here, go for this high. But because I don't have that conviction, I'm just going to trade the lower time frames with the levels I teach you, and that's precise enough. You know, I could have held it for longer. I could have did the long today and made about, I don't know, $3,000, $4,000, both directions. But it's not the intent with this account. There's lessons on drawdown I'm going to teach. There's lessons on how to deal with conditions where I know I can trade a lot, but I won't. And then I'm also going to do times where I'm trading a lot when I shouldn't. And by giving you that perspective outside of a demo account with a live account, that's a little bit more meaningful. It means more when you see it with real money, and I don't need to do it with $1 million to do it. You all can appreciate these figures that I've already shown this year. And it's not something that is outside the scope of reasonable. I'm staying in the capacity of what is, in my opinion, realistic for each of you. Now, does that mean you're all going to come out there and do the same thing I've done? No. I'm saying that this is the likelihood of the parameters which I believe all of you can, if you put your mind to it and you know what you're looking for, you can reap what this account is doing. But I don't want to convince you to trade with live funds. I don't want that. That's not what this is. So please don't take this as an invitation to rush to live fund trading. Don't. Okay? Stay to the process I've outlined for you. Okay? You work out tape reading, studying it, back testing, then watching price deliver in a demo account. And 6 months consistent with a demo. Minimum. That's after you've decided what your model is, and it's in print. You wrote it out. It's completely detailed what you're looking for to buy and sell. When do you put a stop loss at what place? How much risk are you going to manage? How do you deal with drawdown? What's your protocols for that? What are you actually going to do each time? And what's the mode of entry? What cancels it? All those factors are taught in the mentorship. So unless you have a well-written model that's written out and you have it in front of you, you should not absolutely be trading with live funds, period. It should not be done at all, because you're going to be doing things outside of those parameters, and you're going to go into a tailspin. You're going to start losing money, and you're going to panic, and you're going to think more trades is going to fix it, and the only thing it does is exacerbate the problem. So there you go. That's your rant for today. I owed you a video from Monday, so feeling a little bit chatty today. And let's go over to... Let's go to dollar and get that out of the way first. Oh, ICT, you're all over the place today. Yes. Yeah. I'm a mean motor scooter. All right, so we are still stuck in this consolidation. So far, it looks a little promising for not making a new higher high. Like I mentioned, war obviously will send that thing right on through. It'll go up through that and probably punch into the full dollar mark. 100. That we'll see that if war breaks out in Ukraine, dollar's going to go up there. The Fed will start ramming it up there, and there you go. Assuming that is not the case, and for the sake of people's lives and well-being, I hope it doesn't actually occur. Relative equal highs taken, swept. We move down right in here. Also, I want to let you guys know, because I said I was going to do live streams. Okay, what just happened? There we are. Not sure what that was all about. Wouldn't post it and clone it. All right, so fair value gap here. Swing low. Prices rallied. Don't think that the swing low has to be up here. We broke lower here. So this swing low is broken. There's no swing low in here. So this is the only one. It traded down, broke it, then retraded back up into the fair value gap. This level here, let's see, did we enter a premium? It met the minimum criteria. 50 levels here, that's equilibrium, we went above it. And then look what we have, displacement. All right, so let's take this off. And what was I going to say? I lost my train of thought. There, volume imbalance. I was thinking volume imbalance, and that's the first one I look at. Over here, we have a volume imbalance. So far, the only thing we've done here is traded back into that. So it needs to get south of the discount low of that volume imbalance. Okay, so it needs to go down below it, and if it can come back up and act as resistance, hey, it's something good. But I want to see this volume imbalance give way. We have relative equal lows, so there's sell side below that, close proximity low, and then the remaining balance of this buy side imbalance, sell side inefficiency. So we have several factors in here that would, in my mind, line up for continuation lower for dollar. Euro dollar. All right, and I don't know why my annotations are missing here, but let's quickly add them again. I apologize. I'm going to try not to do too much editing on this video. So that's an imbalance there. I like that one up above the one we've been monitoring. And I think if we get above that, I don't want to go more than that for right now. I was going to go here, in case you're wondering. Oh, please just say what you're going to say, ICT. It's like a cliffhanger. See, you were going to do that and you're holding back. No, I don't want to get too overzealous about what I expect. We have relative equal highs here. We traded down, went beyond the imbalance here, and then I think that the story's more telling in the dollar. If we wouldn't have had, for instance, let me give you why I think it's going to go higher. Okay, we have all these lows in here. We had this run down, then we completely came back above and took out this high. Okay, we're retracing, yes. Do I believe that this small little imbalance has been traded to here, and then we went low, and we're going to go lower because of that, because we have a swing low here, it broke it, and then we had the fair value gap, it's returning back in, so now that should be the model I'm teaching on the YouTube channel. I don't see that here, because we've had this run down here on the larger pool of liquidity. I mean, this thing has been dropping for a while. So we took out this area here as they are creating this pseudo resistance support idea. We went down below it. I wanted to see my target. Remember that little shaded area down here? It's not in my chart now. I'm not going to go out the weekly chart to get it, but you know what I'm referring to. It should be in your charts. It traded down below to take the sell side out and then quickly ran away. That, to me, indicates that with the dollar analysis I've already given you on the daily chart, that move here back into this imbalance, fair value gap, and then to trade lower doesn't quite make sense, because we only really shallowly traded up into this imbalance, and we only really just moved above these highs just by a little bit. Now, all of that changes if Bootscootin' Putin takes himself into Ukraine. Okay, if he starts doing the Russian shuffle across those borderlines and sending in missiles and such, man, this currency is going to start moving. Dollar is going to surge. This will tank. That's how I see it. Because if you watch the speeches from Putin, he said basically, look, if NATO lets Ukraine in, he made it very clear. He says, all of Europe, you won't even be able to blink. You'll be in war with Russia. Man, that's not Donald Trump talking. And that sure as hell ain't Biden talking. When Putin speaks, I have never heard him speak with such, as a matter of fact, and his body language even showed it. Like, look, man, I'm at my wit's end with all this. I'm letting you know. Don't ask again, because it won't be brought up again. This is the last time I'm warning you. This is going to be the result of it. So that's going to be problematic, and euro would tumble, and dollar would surge. That's how I interpret it. That's how I see it. So I'm tossing it in there because I know some of you don't care. You don't care about this stuff. But I had dozens of students asking me what my view is. So instead of answering one email or all of them and wasting my time, not to be disrespectful, it's more economical for me to answer it this way, because that way you understand what I'm saying, why I'm interpreting it this way, and what my feelings are behind it. So I'm giving you a complete treatise on it, not just writing something back in an email that could be easily forgotten. So I think right now at the present time, euro could stage a deeper rally higher. And I'm not looking at that as a sell-off. And that can be corrected, obviously, and be wrong, and it start to drop. But it would be surprising to me to do that. And if I were trading it, that would be a day I probably would take a loss. Okay, but I'm not trying to touch this. My focus is still on the indices and the equities market. All right, so, and again, why am I doing that? Because the volatility's there. It's cleaner price action. I can get a better read on it right now. And that's what I'm teaching you. I'm teaching you to be a complete trader, not just be a one-trick pony of Forex. That's never been my intentions here, even though some of you don't ever want to trade in any other asset class, and that's fine. But what's all this? I think they're lessons. I'm not sure if I had that for you guys or if it was for the YouTube mentorship, but we're going to get rid of that, and I'm probably going to regret it. Oh, man. I deleted all my notes. All right, so where are we at with this? I think we may be trying to run above here. I like the run. I like the fact that we took out this short-term low and we rallied. I would have been a little bit more impressed today if this could have at least gone above here. Because right now it's only trading at basically consequent encroachment. I'm not real impressed with that. It didn't find a convincing way above it. So we'll have to play it by ear tomorrow, see if there's any continuation on the upside. Next draw liquidity is here, and I mentioned before when we were referring to pound, I like this. Should this be taken out, I think it'll be a quick run into this, and then it could, really explode. I like the fact that the UK has come out and did a lot of the end of the mandate things. I like that. I think that's going to be positive for your currency, unless they, retract it and create some other scenario where new things have to be instituted, which not that they need to be instituted, but they, Orwellianly drive it down people's throats. So I'm bullish on cable. I don't think it needs to come back below this low in here, even though these look like relative equal lows. I like the fact that we've already rallied. Low here, let's look at that low. Comes in at 34.90 and 6 pipettes. And the low on this one here comes in at 34.86 and 6 pipettes. So it went below it. We had a nice displacement movement away from it. I like that. I just didn't like the fact, again, for completeness sake, I didn't like the fact that we weren't able to get much above that consequent encroachment level of that wick. Remember, that's like a gap, and it can go there and stop. I don't like that if it's doing this as an initial move. It's more convincing, much more pronounced, and more meaningful when you're interpreting price if it can start to take out those. Remember, like I teach with institutional order flow, if you're bullish, down close candles need to support price and bearish order blocks need to be broken to the upside. That's how you validate order flow. It's a simple little short down and dirty approach to simplifying what I learned, and it works. You don't need to do anything more than that to make it more complicated. Well, the same thing applies here. If we're bullish, that consequent encroachment of that candle, the midpoint of that candle, it needs to break away. But if it's keeping price at bay, it's not that convincing yet. So hopefully tomorrow, it can continue higher, and if it does, we'll take our attention to train it on this high, and then start thinking about the likelihood of it trading back up to here. And again, it's in agreement with a continued move lower on dollar, should it be in fact what we get. But I side with the idea of a weaker dollar, so that way we know what side I'm really on here. All right, let's go to NASDAQ in Q. All right, here is the NASDAQ, and I'm using the continuous chart because all the spottiness over here drives me crazy, and I don't want to have an episode in front of you. So I mentioned on the YouTube channel the range that we were working in here, and we traded down to a discount, and we moved back up into the imbalance here, and we worked off of the initial run into that premium high of the fair value gap, again, between this candle's low and this candle's high. Okay, so with those levels in mind, we're going to drop down to the lower time frames. We'll go to hourly. All right, so here is basically the annotations I put on for last night's teaching on the YouTube channel. And we pumped up into the premium high of the daily imbalance. The bodies went a little bit above. I would have preferred, obviously, the body stayed below because this is something I like to see. But with this high being so close to that premium high, the fair value gap, pushing it above that, that's not that big of a deal. But if this high wasn't so close to that high, and I'm probably boring you with details, like this is not even that big of a deal, ICT, why are you talking about it? Because again, I'm obsessive. Like I'm always pursuing levels of precision that is beyond the scope of normalcy. So it's an illness, but I turned it into a strength. So basically what I'm saying is if this high wasn't so close to it here, these bodies of these candles probably would have been laying right on that level, much like the high of this candle went right to it. So this run here, I like the idea of it, ran that out, traded up into it, look real close. This isn't going to be on YouTube. Order block, right there. Take that off. And then inside this little area, we're going to drop down in. I started to say something earlier and got distracted. That darn ICT is always all over the place with these different rabbit trails. Starts talking about something and then changes his mind. My wife tells me that all the time. She goes, "You drive me nuts." When we're driving and we go into conversation, I can start basically 5 different conversations. I'll come back to them and finish them because she's stuck in the car with me. She's not taking a ride with me. She's trapped in the car with me. And I unload on her and I just basically give her like 15 different conversations. And she's like, "Can you finish one thing before you go into something else?" But because I'm wired this way, I can come back to it. And I'm going to talk about something that's more pressing in my mind and then put it there. But the problem is that these videos can't really do like 4 hours all the time. So sometimes I don't really finish the conversations, but I'm satisfied with what I provide in the video, even though it may drive some of you nuts. But this rally above here, that runs on the buy side liquidity. And if this is the premium level that we're in, where is the discount? Below the low here, and the discount low, the fair value gap on the daily chart. But let's go into this area here, scope this up. Why did I go all the way over there? Talking while I'm doing things. No texting while you're driving, ICT. All right, so we go over to 15-minute time frame. All right, see inside this area here? Here's the run on the buy side above these highs over here and outside the range of the imbalance on the daily chart. So in errant price action, it rallies higher. Then it has this short-term swing low, breaks below it, but is there an imbalance in here? No. Look at this candle's wick or tail. It completely trades down and goes back up and closes higher. The next candle, big down. Okay, so this is not returning up into a 15-minute time frame fair value gap. There's no 15-minute time frame fair value gap there. Notice what happens later though. The market breaks again this short-term low. Now we have a fair value gap after a shift in market structure lower, trades into the fair value gap, and then boom. I was watching this one, okay? I was watching this one and I was telling myself, go short on that one because, man, I could do 175 handles. That's a nice chunk of change. But I elected to use the S&P because I'm a nice guy and I promised the student that I would do it. And there you go. No good deed goes unpunished. All right, so we're going to go into a 5-minute chart. All right, let's go over here. Scrub this back a little bit. All right, so you can see again, no fair value gaps in here to really get you thinking about getting in. I don't like this. So some of you are like, well, why isn't this a fair value gap? Because it's just trading underneath this low here, and it's too close to this low. In other words, we've had this delivery here and here, and that's that same candle I told you earlier on the 15-minute time frame. So it cancels this. You don't want to start at a lower time frame and work up. You want to work from the higher time frame down. So I was at a 15-minute time frame, which cleaned up a lot of the ideas about what should be an imbalance, what shouldn't be. So this one here, I'm not interested in that because we're already seeing the overlap of this price range. So in this area here, the price range, well, this is look at the open. The open is 14,605, and the low of this candle is 14,565. So that range of price is basically balanced because we went down and came back up. Then on this candle, it went back over that range again to this candle's low, and then went down again. Then what? Coming back up, what's it going to do? Consolidate or reverse. I'm not interested in going short there. So I want to wait. I want to wait for a more meaningful decline. That 15-minute time frame told the story over here, right in here. And then we have a small little gap right there. Oh, ICT, come on. Now, remember what the 15-minute time frame looked like? A lot easier to see. That's enough right there inside that range. So let me break it down for you like this. All right, so inside this area right here, it's this. So I'm going to put a line here. I'll darken it up for you folks. Got you covered. All right, we'll put that there. Well, you know what? I think I will leave it a little bit thicker. And I'll do something like this. That looks a little bit more prominent. You're telling me yep, look at the body's already respecting it. So let me go back up to the 15-minute time frame so you can compare and contrast why that 15-minute time frame, that little fair value gap, it's taking you right into the highest portion of that 15-minute fair value gap. So that's the 5-minute right here. But now watch this. This is what it looks like on the 15-minute time frame. See? So it overshoots it a little bit, but back into the order block. That's fine. It's permissible. It's something that's reasonable. Let's see if it goes down in this area here. A little bit of live analysis. ICT's now calling out moves in the mentorship videos. A lot of good that's doing me. Didn't do it on the community tab. Alright, so let's just watch that. That's in the chart. We'll see if it gets down in there. I think if it trades down there, that would be probably where we end up closing, somewhere in that range. I don't think it's going to go down there and then go higher. It's too late in the day. Let's see here. What was I going to do? NASDAQ already did that. S&P I did that. I got asked to do crude oil. Crude oil. So let's go to crude. I'll just use the front continuous chart. Look at that. Ooh. I can see why they were asking. Well, not technically. It's the email was weeks ago. All right, let's go to the daily chart and look at oil. Let's go to the weekly first. I don't want to give you an incomplete view. Remember that big move here when they were paying people to get the oil? Come take our oil. We're paying you. All right, so I don't really see anything here. Not it's useful. A little bit of separation in there. Yeah, I don't see anything on here that's all that convincing on a weekly chart. All right, so oil has a swing low on the daily. So watch that one there. Trade below that, come back up in some kind of imbalance like a fair value gap. That would be a short-term trade, and that would only give me an idea to trade down to here. I don't see oil going lower. As long as there's like tension with like Ukraine and all that stuff, anything can pop off in the Middle East and also cause this thing to go higher. I'm not bearish on oil. Like, I don't think that's likely. We're getting ready to go into the spring soon. They're releasing some of the mandate things, and travel's freeing up a little bit more. So I think they'll be spending more money on fuel and such. But that's a speculation on my part based on the right now at the time of this recording. So all that can change. All right, here is the 4-hour chart on crude oil. Wow, look at that. Look at that. We have crude oil. Running a short-term high. Breaking down. Market structure is now what? Once it trades below that low there, what is it? Market structure is what? Bearish. So what do? Go back up inside this leg here. I wish I would have looked at this earlier. I would have taken this trade. Okay, selling short here. Sell side below here. And below here. And the remaining portion of that imbalance there. So we'll see what we get for oil. So 88.20 looks doable. All right, so let's take a look at the hourly. Any more details in it? That's really nice. That's it, right? That's really basically right out of the YouTube channel. Okay, it's right there, plain as day. So if you went short, let's just use the middle of the range here. Okay, say you went short at 94. You took a little bit of heat, probably $1,000 in drawdown if you were doing one contract. Now they do smaller contracts for this, so you don't have to trade the full $10 per point, or for a full crude oil trade contract. If you were doing one regular contract or standard, that's $1,000 profit, $2,000 profit, $3,000 profit, and did we get to? Yep, 4,000. So $4,000 in profit inside of 1, 2, 3, 4, 5, 6, 7 hours. 7 hours, $4,000. That's not a bad day's work. Man, I wish I would have took this trade now. That's it. I'm taking it out of my wife. I missed it. Ladies, I am so not taking nothing out of my wife. Just a little light humor. All right, so we've done Dow. Did we do the Dow? No. Let's take a look at the Dow. All right, the Dow here. I'm going to go up to the daily chart. Same business here. Just a little bit sloppier. See that? We have the gap. Let me go over here with this. Come on, don't fight me now. And the premium high there. All right, let's see how that assisted or did not assist for lower time frame trading. Dow's a little bit sloppier. Okay, that's the reason why. If you look at the difference between this one, there's only 30 stocks that make up this average, so it tends to be a little bit spottier, like it is over here. Not that bad, but let's go to the front month, as a matter of fact. See that? I'm all over the place. These are the things that you don't get to see. Like, I've been tempted to do like a blooper reel. I just don't have the time for it. I really don't have the time, but I've said some really silly stuff. Things came out of my mouth funny that were not intended. Nothing like bad or anything like that, but like, where the hell did that come from? And sometimes I have to compose myself because I go into a fit and start laughing too hard, and I can't even finish on the editing portion to get the videos done. But that's just me. ICT being ICT. So we have the fair value gap in here, trades up into it. We're going to go into the lower time frames, and you'll see hopefully why, visually, why I don't like this one versus the others. Okay. Really sloppy in here. And then, yes, we had that run above. But let's look at this area here and see if we get anything worth mentioning. All right, so we have that, and we'll drop down to the 15-minute time frame. Okay, so far, nothing really to speak of. 5-minute, it's there. You can see it. All right, now you're starting to piss me off. There you go. All right, so we had the run above the premium high, relative equal highs taken out, breaks, swing low taken, imbalance with protraction, and it's meaningful. Nice beefy candle, trades up into that as a fair value gap. You can go short with that. Trade down to the discount low. Another little imbalance here, trades up into that, breaks down lower. In the same business as I mentioned earlier. This one had a little bit more decline below the discount low. So again, it can be, I guess, a benefit in some ways if you're trading it and you have been the benefactor to the exceedingly more movement that you get, but you're not really getting all that much. I mean, it's $5 per handle, so you're not really getting a lot of money. Not that diminish it, because if you do trade this and you're doing well, don't listen to what I just said and let that sway you into doing something else. I just personally don't see this one as the tradable one. So I guess in a way you can look at the same way I do the triad with the dollar index, the euro, and the cable market, or British pound versus dollar. Those three markets I use in tandem. I don't really trade the dollar, do I? It's a barometer. So I use the Dow in the same context as I use the dollar index in Forex. It just gives me another confirmation of what I'm expecting to see if I'm choosing to trade in the equities markets, the index markets rather. So I'm looking for it to provide me relative strength analysis perspective. In other words, I'm comparing the relationship of the lows, if I'm bullish, between this, the NASDAQ, and the S&P. And if I'm bearish, I'm comparing this and its highs versus that of the NASDAQ and or the E-mini S&P highs. So, and I think that's going to be it. I'm trying to give myself an extra moment to make sure I'm not really forgetting anything. Gold, I got a question about that. Gold. Take a look at gold. And all right, this is wartime. That right there. That, remember I was telling you before about this market. This is a event-driven market. It's highly manipulated. It doesn't really want to move unless it's being manipulated. Okay? And I hate to say it, but they can use this market to promote a fear or to calm a fear. If the fear is not productive for them, which is a rare thing, they can influence this market and not go higher. But if gold starts ramping up really high, that means there's a lot of fear being instilled in the marketplace, and it's going to speed up the idea of, war is going to be breaking out not only in Ukraine but probably in other places as well. So, long story short, where's it going? I see 1920 I'm not going to go out on a limb and say much more than that for right now. So basically old highs rather. There you go. So that's reasonable. We do have a volume imbalance in here. So I don't like the idea of it being where we are right now. I'd like to see it accelerate through this high and then maybe come back down, revisit this, and find more support to go higher. Like that would be something I'd like to see. But other than that, I wouldn't be in gold. I wouldn't touch it. All right, soybeans. Let's see here. Soybeans have been rolling here. China's been buying up everything. And corn, wheat, and oats, all those grains the Chinese have been ordering their people to start stockpiling a year's worth of food. So let's do some simple deductions here. There is tension in Taiwan with a possible Chinese invasion. There's tension with possible Ukraine invasion by Russia. I believe personally, on the other side of the Olympics, I think that China might make a move on Taiwan because they know Joe Biden's weak. He's not going to do anything. When that kicks off, then the Ukraine might, if it's going to happen, or vice versa. Ukraine kicks off at the end of at the end of the Olympics. There may be the move by China. If I was looking at the U.S. right now, okay, I'm just going to call it like it is. Joe Biden, oblivious. Obama's really running the country still. So because it's weakened, it's being conditioned and driven into weakened states in the United States. Our military's been depleted. Its morale is the lowest it's ever been, in my opinion. And the long and short of it is that we're easy pickings right now. That's how, if I was Russia or China, what formidable resistance would they get if they both did the same thing? We're not going to go over there like Billy Badass, like we do all the time in the military, and going over to the Middle East, because these folks can't defend themselves like Russia and China. So America has Velcro for testicular fortitude when it comes to Russia and China. We're not going to be so quick to stand up and say, we're going to do something about this. We're going to go in there and install some democracy. We don't have that perspective when it comes to Russia and China. So it'll be like, well, we're going to give arms to Taiwan and we're going to give arms to Ukraine. We're just going to try to make some money on the deal. We're not going to try to fight you. We're not meeting you in the playground after school. Let's put it that way. But let it be anybody else in the world. Oh, we're going to be there. We're going to do this. We're going to do that. So it's kind of silly when you look at it that way. But I know some of you guys in here are veterans and military folks. I don't mean to be disrespectful because I'm in support of the military. I'm speaking specifically from the leadership perspective. Okay, the boots on the ground guys and gals. That those people I have the greatest and utmost respect for. They have a job. They have a boss. They have to listen to it, whether they like to agree with it or not. But the policies is what I'm really attacking here. I don't have the affinity for our leadership that would otherwise be the case for the average American that would support their president, their leadership. We don't have that. At least I don't have that. My household doesn't either. So, all right. So soybeans. This bad boy looks like we're probably going to see $20 a bushel over the course of the summer, spring, summer, and the fall. So I'm watching these markets. Yes, it's moved. Okay, but let the crops get it in the ground. It's still early. Okay, right now what we've had is the whole world be crippled by the lack of fertilizer. Okay, fertilizer is on like the wanted list. Okay, everybody's looking for fertilizer, or if they have it, they don't want to spend it because it becomes impractical. You can't make a profit on it. So grain farmers are electing to do cover crops or certain other crops that would otherwise be a way for them to be profitable. So you have also in the U.S. some of the states that are saying, you can't use water because there's a shortage of water. So their irrigation systems don't have the capacity to support their normal crop yielding. So because of that, the farmers are schooled and versed and experienced. They know that they can't plant that much grain going in the ground because they're not going to be able to irrigate it or water it. So it's going to be reduced in how much you go into the ground with seed. Already from the beginning, all the farmers are saying we're going to have a lower yield on crops. Now, all of this is China's buying. I believe when we get into the springtime, there'll be a consolidation or a decline that sets up a open interest play. Now, again, go in the commodity section of the mentorship and you'll know exactly what I'm referring to, because we already have what's necessary first. A market that's rallying. Some of you look at this and say, oh, I missed it. You didn't tell us. I told you I'm trading seasonal tendencies. I'm waiting for the 2022 crops that get planted. Then the ticking bomb starts ticking. You're watching price. And it's going to start to drop down. The average person is going to look at the price chart and see there isn't really any reason to be trading it. But we'll be watching open interest. Hopefully it'll be a consolidation. In that consolidation, and it could be as small as something like this little here. And if we see a big drop down in open interest, that means commercials will be covering shorts. That means if they're covering shorts, they don't want to be short. Why? Because this market means it's likely to go into the stratosphere, like vertical. In my opinion, okay, don't go crazy and mortgage the house on anything here now. But I am literally waiting with another account just for commodities, for grain trading only. I'm waiting for this scenario. I'm waiting for the season to come into planting and waiting for them to start, hiding the fact that there isn't going to be a lot of grain coming out of the ground. And then all of a sudden, we start getting the X-ray view of price where open interest declines suddenly and we're in a consolidation. I'm literally going to go in here and buy as much as I possibly can. And I don't care. It's worth it to me because I think this is a once-in-a-lifetime opportunity. I don't think in my lifetime I'm going to see the type of moves that these grains are going to do this year because it's global famine related, not just American. Because China's buying all kinds of grains. Everybody's that in the business of fertilizer. They're selling their fertilizer for an extremely exorbitant amount of money. And I don't know if it's price gouging or if it's a real fundamental factor behind it. I'm not in the know in that regard. But I know that fertilizer is a big issue right now. And you can't really expect to have a large yield or a bumper crop of any kind if you're not able to fertilize it. And you certainly can't do it if you don't have the water. And like in the West, we have states saying, you're not going to be able to use this much water. So if the farmers can't water their crops, what are you going to do? You got to give the crops reason to grow with water. And fertilizing them gives them at least the chance of having a yield. But this is such a perfect storm. A perfect storm for these markets to go literally vertical. Think of Bitcoin. Okay? Think of Bitcoin and its meteoric rise. These markets will make that look like nothing. Because Bitcoin's an illusion. This is real. You can't eat a Bitcoin. You can eat wheat, you can eat soybeans, you can eat corn, you can eat oats. They're real markets. They're always going to have a value. They're real markets. It's not a fiat. You guys can argue, say, crypto is not fiat. It's an illusion. You're saying something's worth something. What's it backed by? Your opinion. Your perceived idea of wealth or worth. You believe it's worth something because you believe it. Other people said it should be worth this much, so therefore it is. At any time, it could be worth nothing. Just like anything in currencies. All currencies are useless. They're worthless. It's sold on the idea of an illusion. You will always have value in food, especially in a condition like we have right now where the world is facing real famine conditions. Like, these are engineered famine conditions too. It's not like we don't have fertilizer. It's not like we can't make more fertilizer. It all can be fixed like that. But they don't want that. They don't want that. Okay, so I'm watching these grain markets. I'm not, in my opinion, missing anything. Remember, go back through the commodity section. It's a market that's already rallying. It's bullish. We have that. Let the rest of those parameters I teach you for mega trades unfold. Go back and look at the studies, and you'll see. Just do a search on mega trade on the forum. It'll take you right to the lessons, and there it is. It's a real short little lesson. It's not complicated at all. We'll look at corn real quick. Same thing. Market's going up. Low resistance liquidity run signature. This in here, it might need to come up and then back down in that area just to rebalance all this mess. That's fine. That might be the consolidation that gives us that opportunity for open interest to decline. I use barchart.com for open interest still. I get a lot of questions. Hey, where do I get open interest? Because I don't see it on TradingView. I use barchart.com. And I use the total open interest, not contract volume, to get that value. Just like the lesson teaches you. Go back and watch it in the core content. And let's look at wheat. Yes. See what it's doing here? This consolidation like this, that's what I'm referring to. If we see this type of movement, and then all of a sudden the open interest just tanks and goes down 15%, wow. Like, that's going to be it for me. And I'm going to be looking for hopefully the move down as it's doing it. If I can see that in the chart, I'm going to tell you what I like out of the grains. In other words, there's going to be one or two of the grains I'm going to be in. I'm not going to be in all of them. But the ones I like, obviously soybeans is going to be one of them. It may not be wheat. It may be corn, okay, or vice versa. Or it might be oats. Depends on what the market structure looks like, what the option premiums are for what I'm trying to frame out. That's what I'm watching. I'm waiting, okay? Because it's a mega trade and because I'm scouting it long term, I want to put these ideas in motion and then forget about it. In other words, once I put these positions on, I'm not going to be babysitting them on a day-by-day basis. So should these things materialize like I'm hoping they will, please do not worry me and badger me on a day-by-day basis about it, because once I establish positions, and I'll let you know when I did, I will not be wanting to look at it because my personality is short-term. And I don't want to be referring to these moves on a day-by-day basis. I'm subscribing to a 3 to 6 month perspective. And it's really hard for me to do that, okay? So it's taking a lot from me to prepare for this type of trading because I don't like it. But I don't want to be without this type of move because, number one, I believe it's going to be historic. Two, I think it can literally outdo what my expectations are. Like, I'm thinking $20 a bushel for soybeans, but it could literally, who knows? I don't know. To be honest with you, I don't know how hard and fast they can go up. But if you've never seen limit up moves, I believe you're going to see them this year in the grain markets. Limit up is where the market just literally goes up as high as it possibly can in one tick. At the open, it's as high as it will be allowed to trade for that day. You cannot get in it. You cannot get out of it. And I think we're going to see days of consecutive up close candles where it's no body at all. It's just the open and close is the same tick. It's going to look like a dash. Okay, a dash. That means you're in lock limit up. That's a real fun time to be in a market long. But if you're short, it's terrifying because you don't have a way of getting out of it. Nobody can help you. Your broker cannot get you out. You can't pay a premium extra amount of money to get you out of your trade. You're stuck losing the maximum amount of money every single day if you're wrong. Think about that. So that's why I'm interested in trading the option, because I don't want to be caught in moves that could happen like that. I mean, we could have days where, back in 1995, there was days where we had limit up and then limit down. And that's weird. Like, you're stuck. Like, you're really stuck in those moves. You cannot get out of them. And it's terrifying if you're wrong. Like, in your mind, you're thinking, what if this thing does this for a month? It's not likely to do that, obviously, but it certainly feels like it when you're in it. So that's a look at the grain markets. I'm bullish, obviously. I'm looking for higher prices, but just settle yourself down. Yeah, the backdrop behind the mega trade is forming. We wait for seasonality to come in, and then also we want to see when hopefully a seasonal tendency is suggesting that the markets should be bearish. If we start seeing these things go the opposite direction, man, that's really indicating that there's a shortage. A seasonal tendency, if you've never written this down, I've mentioned it before. If a seasonal tendency is expected, it's a strong one, it's been happening for a lot of years, and you can use your seasonal tendency charts I shared in the teachings for that, in the core content. If you're expected to see seasonal tendency being bearish and the market's being bullish, that's really, really bullish. That's not, oh, well, it's just not following the seasonal tendency. No, that's something that's exceedingly bullish, and everything's reversed as well when you're expected to see a bullish seasonal tendency, but it's going lower. That means it's really bearish, and they tend to be really nice, like kind of like hidden mega trades, like not in the same delivery of monstrous type of moves, but kind of like it usually, those moves are the ones that usually take traders off guard, where the mega trades, they can see it, they just don't know where to get in, and they just look at it after the fact saying, well, I wish I would have got a part of that. I knew it was going to go up, that type of move. But if you have a seasonal tendency that's expected to move one direction or the other, but the technicals are showing you the opposite is actually true, that is very, very telling about the underpinnings of the marketplace, and you can get really surprised. If you don't know what I'm referring to or never seen it, it can catch you off guard, and you'll be looking at a move and say, wow, where did that come from? Okay, so I've learned that a lot by experiencing losing real money and then looking at it and saying, but the seasonal tendency said, and then finally it dawned on me, hey, this keeps repeating, and it becomes a real strong move. So that's that. All right, so I think that's going to be it. I've talked you to death today, gave you a lot of insights, spoke to you like you were my own kid. So I think that's going to be it. I will touch base with you on YouTube tomorrow night and on Friday with the weekend commentary. Until then, be safe.